Hi, my name is Michael Lannon. I'm the founder and executive director of 2020 DIRECTINVEST. I set up 2020 DIRECTINVEST to allow Australian investors the ability to access a range of financial products directly, ultimately saving them fees and commissions. As part of our commitment to 2020, we try and educate our customers through articles and videos like this to help you understand the ins and outs of various investment products. Now today I want to talk about wrap accounts. A lot of investors have wrap accounts, don't understand exactly how they work. So I guess my goal here today is to give you an idea of some of the fees, some of the benefits, some of the drawbacks associated with how you access a wrap account, and give you, I guess, the information you require to make an informed decision. So first of all, what is a wrap account? Well, a wrap account, basically, the term comes from like a wrapper. You wrap all your investments in a single sort of structure or a portfolio administration system. So effectively, what you do is you can access a range of assets in a single place. It revolves around a central cash account where you can have term deposits, managed funds, direct shares, all through a single account with a consolidated sort of a login that lets you see all of your investments in one place and consolidated reporting. Now, some of them, the reason I want to talk so much about wrap accounts today is that roughly 75% of all new investments in Australia go into some sort of investment platform. Now, the major providers in Australia of these platforms are Asgard, owned by St. George Bank, BT Rep, which is owned by Westpac, MLC, which is owned by National Australia Bank, and then you have others like AXA, Oasis Asset Management, which is ultimately owned by ANZ. And there's also a number of white labels or badges of these products that various dealer groups market to investors. So I guess the key today is to give you an idea of some of the benefits, some of the features, some of the drawbacks, and show you how to access wrap accounts cost effectively, and also give you an understanding of how they work. I guess the main question investors have is, what are the benefits of wrap accounts? Why would I use a wrap account? Well, as I pointed out earlier, it's ease of administration. You get access to a range of investments. And certainly in the managed fund space, wrap accounts allow you to access wholesale funds that typically have investment minimums of $500,000 up to $10 million, which are not available to individual investors. Secondly, you're able to access boutique style funds that are available to wealthy individuals or only to certain investors. By putting them on a platform, the minimum investment requirement is met by the platform and individual investors are able to access them. I guess the other key benefit of a wrap platform is it puts all of your investments in one place, so it simplifies the administration. So instead of chasing up a bunch of tax statements on various shares or individual funds to try and consolidate them, the wrap platform provides you with a consolidated annual tax report, which shows you all their gains, losses, dividends, interest, etc. in a simplified report. Now, you pay administration fee to the platform for this service, but this very often more than offsets the cost savings that you get from providing your accountant with a single statement as opposed to a shoebox full of receipts. I guess the final thing is the ease of transacting. Now, typically, if you have a range of managed funds with different companies, you have to sell one fund and wait for the money to come back before you can buy another. You're filling in applications and proof of identity every time. Whereas with a wrap platform, once you set it up, there's a range of several hundred funds available, direct shares are available, term deposits, cash management. So it's all centralized around this cash management trust, allowing you to buy and sell and transact in a very efficient manner. So I guess in summary, the key benefits are ease of transacting, low costs, I guess an annual tax statement, which gives you simplified administration, access to wholesale funds and boutique funds. So given that scenario, wraps can work to your advantage to simplify investing. I guess an important question when considering wrap accounts are, what sort of fees are involved in wrap accounts? Well, I guess I'd like to answer that question. I'll break it into two categories. There's the fees you pay an advisor for access to a wrap account, and then there's the fees involved in the wrap account itself. So let's first look at advisor fees. Typically, advisors charge 3 to 4% entry fees. They charge an ongoing advisor service fee, so you can switch around your investments within the platform, but you need to use an advisor to do so. Now, on the platform side, the platform itself or the wrap account, there's generally a category administration fee, There's access to investment managers. You charge a management fee, but those very often are wholesale funds, so the fees are half the cost of a retail fund. Then you have, I guess, transaction fees for brokerage for buying and selling shares, which you would have in most cases, or a transaction fee for buying and selling managed funds. Now, so the key as an investor is to look at, okay, what fees are optional? And I guess in the past, most wrap accounts have only been available through an advisor. So the advisor fees you can negotiate on one side, and the platform fees, certainly on the administration side, tend to decline as your balance increases. So they become less of a percentage of your overall investment. So as an investor, the key is to understand the fees and charges that are involved in your wrap account. So the key question for you as a do-it-yourself investor is, how do I access a wrap account in a cost-effective manner? How do I separate advice from product fees? In 2020, we believe that, instead of buying products from financial planners, you should seek them out for advice about strategy and pay a dollar-based fee for that advice. When it comes to having a product or investment platform, or wrap account in this case, you should have control over how and when you access it and what fees you pay. Now, given that most of the wrap accounts in Australia are only available via an advisor, they're sort of the gatekeeper, there's an extra layer of fees added by using an advisor. And I believe this undermines the cost effectiveness of using a wrap account platform. So what we've done in 2020 is that we've grouped together a group of dealers and created a white label version of Asgard's eWrap, which covers investment, superannuation, and pensions. And what this allows you to do is to access a wrap account on your terms and gives you the opportunity to pay for advice if and when required. So the advice part is unbundled. So now you can choose to have low costs. We provide a transaction service that's just a low-cost transaction service on a non-advice basis. So you can seek your advice when required, and on your own, independent of your advisor, you can control your investments and have all the benefits of a wrap account platform. Okay, so now that you have a little better understanding of how wrap accounts work and the type of products that you can access, the key point I wanted to make was that advice with a wrap account is optional, and you can separate the two. Now, to understand it a little more, I've written an article called "How to Choose the Best Wrap Account." So if you Google that, "How to Choose the Best Wrap Account," or visit our website at www.2020directinvest.com.au, in the investment section, you'll find a whole section devoted to wrap accounts, and certainly find that article. And other than that, our friendly staff here at 2020 are happy to answer any questions you may have.